Hello everyone, my name is Bruno. I'm the founder of Amigos of CX, and today we have a special episode from the Diálogos. It's a friend from Qualtrics. He's based in New York, first time in Brazil. Welcome, Dmitry. Hopefully you enjoy Brazil and hopefully you enjoy our conversation here today.
Thank you. It is absolutely fantastic to be here.
Awesome. So, like all the other episodes, we usually start with two simple questions. What is CX for Dmitry?
It's a great question. I can give you a two-part answer. On one hand, CX is every single experience that as a consumer we have with a brand, a company. It's really how they make us feel at every point of the interaction. From the beginning, from research to marketing to consuming the service to how we feel afterwards, are we going to recommend? But also the reason that I am drawn to CX is because it is such an enormous competitive advantage in the world of business, in the world where most things are interchangeable.
Yeah.
And the brands that win are the brands that manage to make you feel something about it. So that's my answer.
Awesome. Perfect. And I see that nowadays brands are delivering basically the same service, the same kind of product. So experience will be the great differentiator, right?
100%.
Awesome. And that's part of our discussion here today. So I want to get a lot of spoilers here. Before we get into our real conversation, it's going to be about experience management in the financial service. Who is Dmitry?
Dmitry Binkevich, I live in New York, as Bruno mentioned, visiting our friends in Brazil, in São Paulo. I lead regulated industry product marketing at Qualtrics, which means I work with financial services customers, government customers, healthcare customers, and education customers. Prior to Qualtrics, though, and this is going to inform what we're going to talk about and how I personally think about customer experience, I spent 20 plus years in financial services doing things that had nothing to do with experience.
Okay.
I was an investment banker, I was a consultant, I was a strategist. So that's me. And then on the family side, I am actually turned 45 on Sunday.
Congratulations.
Thank you. I have two wonderful girls, 14 and 18. I've been married for 22 years, and have a wonderful puppy named Nashville that we got during COVID.
Oh, nice. Awesome. So, getting to our conversation about financial service. I mean, you have an amazing background in this industry, and you probably saw a lot of changes, a lot of new moments of the industry.
Yes.
Looking at it today, why do you think the financial leaders should really care about customer experience?
If we look at the financial services industry, and financial services industry is a little bit of a misnomer, right? It comprises a lot of different industries. There's banking, there's property and casualty insurance, life insurance, wealth management, asset management, etc. And what I'm going to say is going to be true for all of them, but more so for some than for others.
Okay.
Let's take banking, for example. Every single bank sells effectively the same set of products, right? A checking account is a checking account. A credit card is a credit card. A miles program is basically a miles program.
Yeah.
And the cost of switching, now that we're past the world of mobile, we're into the world of AI, the cost of switching is zero. You erase one app, you download the other app, you transfer all of your information, and you're done.
Yes.
And so as I think about how do banks and other financial services companies differentiate themselves in a world where their services are interchangeable, therefore the pricing is interchangeable, it's very hard to charge more for effectively the same service.
Yes.
The only way is to build enduring relationships, and those relationships have to be anchored on how you make your customers feel about you. So it is my belief, a very strongly held belief, that it is one of the biggest components of a competitive moat that any financial services firm can have today. It is definitely not the only one.
Okay.
Not to belittle, there's lots of things going on in a bank, but it is a huge component of how you make one bank stand out against another.
And it's curious to listen to you because taking a look to Brazil moment when it comes to the financial, especially in the banking side of things,
yes,
we see the big branches, like the big ones, the old ones and big ones. They're struggling to really create this bond, create this connection with the clients because they're very old school with very effort journeys and no differentiator at the end of the day.
Yes. What is going on is actually one of the favorite things that I like to talk about. It's called the death of average.
Okay.
And also the death of distance. So I'll take the death of distance first. Before, when you were a bank and you had a branch in a town or in a street, and nobody else had a branch around you, people had to go there.
Exactly, yeah.
Right? So you had a captive audience that had to go to your bank. Right now, I think the last time I bank with Chase.
Okay.
The last time I was in a Chase branch, it was a few years.
Yeah, same for me.
I bank mostly on my phone.
Yeah.
And so when it comes to that, Chase no longer has the competitive advantage of being on one corner. The second one is the death of average. Similarly, when there's one branch in town, regardless of how well it serves customers, people have to go there. But now I open my phone and, for example, I hold my savings account in a place that gives me a better savings rate. I hold my checking account in a place that gives me the most convenient connectors.
Yeah.
And I trade my stocks in a third place.
Yes.
And so increasingly, people are able to choose the best of breed when they select financial services. So it is no longer okay just to be there and be average and expect people to come in, which is exactly the dynamic that you're describing with the big incumbents, as well as newcomers like Nubank and others.
Yes. And you can create your own bundle of service, right?
Yes.
So like you said, investment in one, banking, day-to-day banking in another one, and it's just easy because in like minutes you can open accounts anywhere.
Open an account, and now with the AI apps, you can actually say, hey, I have this here, this here, this here. Help me manage across all of them.
Yeah.
So you basically are not, if you're not delivering the experience that tie consumers to your brand and that make them feel loyal to you, it is a losing proposition. Then you're basically competing on price, and the only way to compete on price is down.
And on your perspective, how to create this loyalty with this a lot of competition, a lot of possibilities, a lot of options for the customer. Is like you said, it's very easy to change for a different brand. How to create this bond with the customer and really create this connection to make sure that they are loyal, or at least they are with us for the long term?
It's a great question. I think the way that I would posit that you do it is that you have to build it. It is a medium to long-term proposition.
Okay.
In the beginning, you have to be able to trust that the bank will do what they say will do. So there's a reputation because you have not experienced the bank or the insurance company yet, and you've talked to other people, or you've read reviews, or you've seen advertisements, and they say that it's a great bank or insurance company to work with. But then you actually need to build your own confidence through the experience, through everyday experience, whether it's a withdrawal or you check your balance or you call the customer service. Every single touch point, there's an expectation that things are going to go well, and that they, to use the most egregious example, not make you re-authenticate at every single point of contact and not make you repeat all of the information at the single point of contact. So there's a concept of a Maslow, he was a psychologist, Maslow hierarchy of needs.
Okay.
Right. So in the beginning, they need to be safe and solid, right? You need to know that your money is safe.
Yes.
Right. Then they need to know that the services that you're paying for actually work. right? Then you begin to say, hey, were they empathetic when I called them with a problem? Did they over deliver? And so over time, you build this pyramid. But the trick is, it's not exactly, you're only as good as your latest interaction, but it's pretty close to that. If you have a great relationship with the bank, but then you have several bad interactions in a row, you have just taken off a few layers from that pyramid, and the bank is going to need to rebuild them. So that's how I think about
Awesome. And in the banking industry or the insurance, I mean, the financial service, it's a very sensitive relation, right? Because we are dealing with life, the things that you have, a car, a house, loans, and things, and also your money.
Yes.
So trust is like top level in order to really make sure that this connection is created, right?
Yes, trust is key. Again, the base is the bank not going to disappear and take all of my money. But as you go up, for me personally, it becomes almost, does the bank have my back? Are they looking out for me when I am not thinking about this? And one of the really interesting things that Chase does that actually works really well, they monitor your credit card spending, and they will actually send you texts if they see that there was a transaction that they may not think was you. And I thought it was really annoying at first because it when they were tuning the system, it happened more than it should have. But now I actually deeply appreciate it because I know that they are looking out for me. And if something does go sideways, which has happened to me recently, no questions asked, we will cover all of the transactions. So that's how my loyalty to that institution was built.
Okay, awesome. And when you talk about customer expectations, I mean, nowadays it's really common for us to compare different experience based on different industries. So I can compare the experience I have in my bank with the experience I have, for example, in buying a car.
Yes.
So one is really connected to that, and the clients are really rising the bar to their expectation. It doesn't matter from which industry or which kind of solution they're dealing with, right?
Yes, 100%. This, once we are into the era where everybody has, I mean, in US at least, everybody uses Amazon, right? Everybody uses Google for search. Everybody used to use Facebook. I think they use Instagram now, but
Yeah,
the experiences, and the answers are instant. The quality of service is generally pretty amazing, right? And it's always there. And then you come to your bank or insurance company, it's like, oh, we work from 9 to 5, and you cannot get your money or talk to a person outside of those hours. I, as a consumer, am sitting there, I'm like, that is not okay.
doesn't make sense, right?
It does not make sense. And so increasingly, to the point that you made when you asked the question, especially the digital experiences are measured against the hyperscalers in US, against apps and experiences that people have on a daily basis. It could be Amazon, it could be Instagram, it could be Google, it could be, I mean, at this point it's ChatGPT and Claude.
Yeah.
Right? Like, if they can give me an answer, why can't you give me an answer? Why do I need to sit on a call queue for 25 minutes? So increasingly, every experience is shaped by a fairly small handful of companies. And to your point, the expectations just keep on rising.
Yeah. You talk about digital experience. Now, we know that nowadays people really don't reply to surveys anymore, right? I mean, it's the percentage is getting lower and lower every day, right? But on the other hand, in the digital experience, we have a lot of data, and data based on behavior. How can we use all this data in order to understand behavior, in order to understand what is the next step for the customer, in order to be more predictable and really deliver better experience for this user in the financial service industry?
The key is to lean into the technology that we have now to pick up the signals everywhere that they come from. If I'm going to take you back in a small history lesson, if we think how NPS was developed or when NPS was developed, it was developed by Bain and Company in early 2000s.
Yeah.
And if you think about what we had in the early 2000s, we had America Online for US to
Yes.
get on the internet. We had email. There was no Facebook. There was no iPhone. There was no cloud computing. There was nothing. There was basically just email. And so Bain came up with a fantastic tool. They used surveys to try to understand experiences. Then they tabulated it, etc. So it was fit for purpose. But now, fast forward to now, and no knock on Bain, NPS is still an extremely useful metric. But to your point, we have so many more data streams that are coming off of every single interaction. You started with digital, right? We can see where you click and where you hovered and where you express frustration, right? That tells a story. We can...
And a genuine story, right?
Yes, and a genuine story, because to your point, if somebody were to ask me, are you angry? I would probably not tell them.
Yeah.
Right? But on a clickstream basis, or even more so on a contact center call recording basis, you could tell if I'm confused, angry, happy, etc. So we live in a world where the vast majority of our data is what we call unstructured, right? It's clicks, it's video, it's chat, it's call transcripts. And in order to get the richest possible signal, we have to go where the data is. And so surveys always have a place if you want to do a very specific ask, a very targeted endeavor. But really, the bulk of the data is going to be unstructured.
Cannot only be survey, right? Cannot only be NPS.
Emphatically, I have never seen a successful program, and we can talk about what it means to be a successful program. I have never seen a successful program that relies just on surveys.
Since you mentioned, what is a successful program for you?
It is my thesis, and the reason that I talk about my background is because it informs the way that I view the world.
Yeah.
We are not in the business of experience because we like to make people feel good. We do like to make people feel good, but we are in the business of experience because it is good business.
Yeah.
And ultimately, any program that works, any program that is successful, has to impact the financial and operational outcomes of the company in question.
Yes.
So whatever the outcomes are for the company in question, it could be higher sales, it could be cross-sell, it could be lower costs. My definition of a successful program is a program that does that.
Okay.
It impacts the financial and operational outcomes in the real world of the company in question. So it doesn't need to be on a short term, it could be on a longer term, right? You could poke holes in this argument, but on some time frame, if operational metrics or dollars and cents or reais do not move, the program has failed.
Doesn't make sense, right? Yeah, we have a lot of conversation in the markets. Is exactly about to this point. If CX program is not somehow connecting to financial outcomes, it's
why do it?
Why do it? Exactly. It's just spending money. It's just like not going anywhere, right?
Yes.
And one thing that we see a lot is that companies focusing only on NPS or only on the C side and not connecting to operational data, to other channels, to behavior, because they believe that NPS will give all the answers.
It is, and the reason people do this, again, my belief, NPS has the benefit of being very concise and very well understood.
Yeah.
But if you actually read the literature that Bain wrote historically about NPS, they didn't just say measure NPS. They said, actually look at how these people behave in your business, which means what are the spending patterns? What are the retention patterns? Which makes a ton of sense. And so what I typically recommend companies do when we begin talking about experience is try to be very specific about what metric are we trying to move. Because depending on what you're trying to do as a company, your CX program will actually look pretty different.
Yes.
Right? You will measure different things. You will ask different questions. You will focus on different people. And the more specific we can be, it is an input into answering a business question.
Yeah,
right? But in order to do that, there must be a business question.
exactly. We need to understand what is the company goals.
Correct. What are we? I have seen programs that are focused on retention.
Okay.
Right? In retention, you look at your customer base, you look at their experiences, you try to proxy out based on past outcomes who's likely to leave, and you intervene, right? If you're looking at cross-sell, you are looking at sort of longitudinal NPS or longitudinal CSAT. You're also looking at like email open rates. You're looking at account balances. So you mentioned operational data. The operational data will be very different depending on where you point your program.
Exactly. Yeah.
And there are natural places to begin for various industries, but so I'll just loop back to where I started. The other reason why NPS focus is so popular, it's because it's simple. Bringing in operational data and doing the analytics that need to be done in order to get to the financial and operational outcomes is difficult.
Yes.
And a lot of CX teams are under-resourced. They're small teams, they're doing the best they can, and it is difficult for them to do the work that is required in order to arrive at those conclusions. So that's when I go talk to customers, I try to preach a little bit of the gospel of let's focus, let's be specific, let's be quantified.
Yeah. And also one big challenge is that we have a lot of silos and data is spread all over the place. So sometimes it's really hard to get the one vision of the whole data in order to do all this correlation, in order to understand how things combine and to really create impact. But like you said, I mean, sometimes we need to focus on one specific KPI, one specific business goal in order to start from somewhere, right? And start to generate some value and to make sure that CX can really impact the business, right?
I very much, exactly like you said, I am a fan of earning the right to grow as a CX program. Let's begin in a targeted way. Let's prove the outcome. Let's actually see, hey, throughput is faster, the dollar amount is faster. And then say, okay, this is working here.
Yeah.
Let's point it at other outcomes. It is obviously not the way that it often works in large corporations, especially with existing programs that are often tied, I'm sure you've seen this, tied to compensation.
Yes.
So NPS moves up, NPS moves down, people's incomes get affected. And so that presents many difficulties in trying to drive sort of this new thinking in the world of experience.
So you mentioned something that is really interesting. NPS as a bonus compensation. Is that happening a lot in the US as well?
Yes, it is very much happening because it is a simple metric.
Yeah.
Because it is actually a very thoughtful metric if you use it appropriately.
Yes.
People say, okay, how do we measure experience? I've heard of this NPS thing. Let's do that.
Let's apply.
Right. The problem, of course, with NPS is by itself, it is not spectacularly useful.
Exactly.
Right. And so I often talk about when I talk to customers, I ask them like, hey, what is the conclusion if your overall relationship NPS goes down by a couple of points? Like, what are the actions that are stemming from that? And oftentimes, unless you actually have the journeys and the interactions underneath, it is impossible to know why that is happening. So you celebrate it when it goes up. You're a little bit sad because your bonus is lower when it goes down. But otherwise, it's not very actionable unless you have the full infrastructure.
And one thing that we see here is that besides being actionable or not, is also they don't really care what is happening behind the NPS. They're just caring about the number.
Correct.
If it's going high, everybody's happy. If the customer is not happy, who cares? The NPS is high, right?
That is also very, very true. NPS has a lot of layers in it, and the nominal number does not always tell you the full story.
Yeah,
absolutely. You can have, in fact, I'm thinking of a specific case where NPS was trending up to flat, but the customers were attriting.
exactly.
So the business outcomes, customers are walking out the door. And then you begin to get into kind of why that, absolutely. If you're not thinking to second and third order consequences of what you're doing and you're just looking at the nominal number, it's going to be an interesting program.
Yeah. And one thing that we see also happening a lot here in Brazil is that since there's a lot of NPS tied to bonuses, whenever you buy a service or a product, at the end, the attendee will always come to say, you're going to receive a survey. Please give a 9 or 10 in order to help us. Is that happening as well?
Yes, it definitely happens. But what happens also, and this is just now that I work in the experience management industry, I notice these things. I go on a website, I complete a very simple transaction. I may, like, very, very simple. And out pops an intercept that is an NPS survey that asks, on the basis of what just happened, how likely are you to recommend us to your friends? And my answer, honestly, is I don't know. Your website is supposed to work.
Yes.
You didn't do anything extraordinary. Right?
Back to basics, right?
Back to basics. So yeah, people, it's amazing how people can kind of misconstrue where and how to use this particular metric, especially once you begin to tie it to compensation.
Yes. And just giving some step back, I mean, you talk about unstructured data, behavior, conversation transcripts and things like that. Based on your experience, on all your years of work in management, are you seeing companies really using this in their favor? I mean, getting this extra data, unstructured data, and transforming this into tangible information in order to take action and really transforming this into some outcome, business outcome?
Yes, 100%.
Okay.
If I were to reframe your question, you're asking, have you seen actually successful programs using these data sets? Yes. I have seen, there aren't many, right? Truly successful programs. We have talked about these customers publicly. So like Ally Bank, for example, in the US, it's a fully digital bank. They're using their, there are no branches. They're using their transcripts very thoughtfully to try to eliminate friction, because they know, like we talked about in the beginning, that they're, 1 to 2 friction experiences away from somebody just saying, I don't need this, I'm just going to go to a different bank. Yeah. We have folks like Nationwide Insurance and Principal Insurance doing very, very interesting things at the intersection of customer and contact center agent, right? To make sure that customers get what they need and what they want, but at the same time, customers actually sometimes ask for things that they can't or shouldn't have.
Okay.
And they will mark the interaction as poor if they didn't get it, but they weren't supposed to get it. So the contact center agent actually did everything right.
Okay.
So being very thoughtful about this, we've got great examples of companies increasingly beginning to use the digital data sets, not just the basic intercepts, but the session recordings and click tracking to track things like rage clicking, broken clicks, etc. When the storefront is largely digital or app, it is key to make sure that every single thing is where it needs to be and the flow is what you want the flow to be. And even more, we're beginning to see companies lean into using agents, as in AI agents, to close the loop with customers in context of things like a survey, right? Historically, survey has been a one-way, kind of a one-way ticket. You're asked the question, you respond to the question, and kind of off it goes into the darkness. Increasingly, people are, it's not exactly a chatbot, but it's beginning to be a more conversational experience where you don't need to wait 48 hours for somebody to send you something. Within the parameters of what the agentic tooling is allowed to do, it will just give it to you.
Yes.
So that you close the loop right there and then and don't have to wait. So we do see customers use unstructured data sets increasingly because everybody has the same realization. I mean, people are looking at survey response rates and they have the same realization that you do. So you either need to, it's not really either, you need to augment it with unstructured data, and you actually need to transform the survey experience into something a lot more interactive.
Yes.
So that the customer has actually a reason to keep talking. And the interesting thing is we've done tests on this type of functionality, and one of our fears was that we would have customer drop off on surveys if we sort of kept asking. It's not what I'm talking about is not the agentic one. I think it's called response clarity.
Okay.
So it asks a follow-up question if the response is not clear. And we thought that customers were going to drop off because, I mean, nobody likes taking surveys. Turns out customers do not drop off with 1 to 2 follow-up questions. And the quality of the unstructured data of the free-form response actually increases dramatically. So same form, same survey, but now like 50% more unstructured data coming from it.
And do you think artificial intelligence is really speeding up this process of getting the structured data and this is 360 degree?
100%. It has made it so much easier to analyze large unstructured data sets and to connect different data sets together, which is kind of the holy grail of the experience.
That is the biggest challenge,
profession, right? It's like I have 5 different data sets. Each one of these is 2 terabytes. How do I connect the two?
And not only connecting, but also analyzing.
That's right. Like, how do you clean it, connect, analyze it?
Yeah.
And AI is just kind of leaps and bounds in terms of what is actually possible, both within our platform, but also, I mean, frankly, customers are doing it themselves, right? I'm doing it myself when I need to do it for my own household purposes.
Yes.
But the ability to literally talk to your data is incredible. Just ask questions where before you had to spend days building kind of word models. Now you can have AI help you build a word model. You still don't always want black box AI, so I'm going to talk a little bit about the limitations of this, especially in places like financial services. Black box AI is difficult because it's not auditable.
Okay.
Right. If push comes to shove, if you made a recommendation or if you delivered an experience, right, it's a heavily regulated industry.
Yes.
And if the regulator asks, you need to be able to show exactly what happened. And so that is a limitation on just using pure black box AI, but using AI to query your data, using AI to build models, using AI to close the loop from an agentic experience perspective. It has tremendously accelerated virtually every single part of the experience management ecosystem.
Awesome. And when we talk about blind spots in the financial service, what do you see is the main blind spots that we see that is happening in the market today?
From the perspective of the firms,
yes.
From the perspective of the companies. I think people are still too complacent about the role of experience in their offering and in their value proposition. I have met with many customers to tell them kind of very similar things that I've told you, and not everybody is willing to change.
Okay.
So that is a huge one. There's a place that they might be in that is comfortable and warm and cozy, and they do not want to
just stay there.
So that is a huge blind spot because the disruption that I described is going to continue.
Yes.
Right. Like my bank is based in New York. My savings account is based in San Francisco. My alternative investment platform is based in Singapore. So.
And I mean, the speed of disruption is each time faster, right?
Each time faster. The second thing is, I think for firms that rely on human distribution, like insurance companies and wealth managers, where there are your experience is the person, your experience is your advisor, there is insufficient attention and investment, in my humble opinion, on the experience of the advisor or of the agent.
Okay.
I think the intermediary experience or the channel experience is something that these companies could do well to pay a lot more attention to, because it is I used to work for an insurance company. It is a very expensive form of distribution. And the reason people keep it is because it's highly effective. And right now, with knowledge and the availability of information becoming completely democratized, especially with the AI tooling that is out there, you have to really think about what the value proposition of this person is and arm them, make their experience amazing, and arm them with every possible tool to deliver the kind of experience that they have. So there's that one. Those are the big kind of that come to mind. From a product perspective, I don't think we've seen significant innovation in the financial services industry, at least in retail.
Okay.
What was Warren Buffett's quote? The last great financial services invention was the ATM. But overall, those are the two: the channel experience, and just people underestimate just how much they are in the experience business. They think they're in the financial services business, but they're really in the experience business.
Okay, talking about people, right? There's a lot of, especially in the financial, in the insurance, there's a lot of the brokers, the middlemen. I mean, the one that is really in contact directly with the customer. We're talking about the employee experience. How much value we need to put in this employee experience in order to generate value to the customer? How important are the frontline people that are selling insurance, that are selling investment? How do you see that relationship between employee and the final customer?
So the top line is enormously important. And I started talking about that when I was talking about the financial advisors and the insurance agents. I think in a world where many interactions are digital, people often crave human interactions. And they feel safe with human interactions, and they feel like they can trust the human sitting in front of them. And thinking about EX, because I think that's your question, right? Employee experience, or maybe a contract employee, because not all of these people are employees, experience differently from how we have historically thought about it is going to be key. It's not a financial services blind spot. I actually think it's a blind spot across the industries.
Yes.
Some industries are beginning to break out of it, like hospitality and restaurants, because their entire business is frontline personnel and delivered by humans. But we need to shift or just increment how we think about employee experience away from just doing sort of the quarterly or, the semi-annual type survey questions, which is like, how do you feel? Are you going to stay? That's all useful. But also, do you have the tools that you need to be successful on a daily basis?
Yes.
Can you tell me if the systems that you work with are clunky and are taking time out of your day? Is your phone time on hold with the same contact center that the company they're calling in very long? Whenever the human is the experience, and in so many industries it is.
Yes.
In financial services, actually, the larger the amounts of money, the more often you will have a human delivering the experience. It is key to make sure that the experience of that individual is as amazing as possible. Because if their day-to-day is not great, then the experience they're going to deliver to the consumer is not going to be what the firm wants.
And I think in the financial service, this relationship is critical because, we are talking about sensitive data, that is their money.
Yep.
We talk a lot about trust. And usually the broker, the agent, is the guy that the customer will trust. Sometimes they will trust the agent, but they don't trust the brand.
Correct.
Because of the relationship that they have, right?
Yes.
And if the brand doesn't take care of this person, they can just take this person to another company, to another place.
And it is a huge risk when a person in that role walks, because you made a fantastic point. Customers think of themselves as the clients of a person, not the clients of a company. So oftentimes, if the person walks, customers walk
too. Yeah.
They will follow the person. And so to me, it is often baffling, completely baffling, when I talk to insurance companies, when I talk to wealth management companies, that they're not investing more in the channel experience and the advisor experience and and making sure with the same tools that you and I just talked about, like, to make sure the rage clicks to make sure the navigation is right, to make sure that the contact center is on point that funnel at the advisors, right? That is where the growth and the retention is going to come from. And I would venture to say that all of life insurance, all of financial advisory, with the amounts of money that are very, very large depends on this construct. And I think these companies in particular could do a lot more with investing in advisor experience.
And Dmitry, based on your experience, you've been across banking, insurance, wealth. What are the things that you see that are similar? What are the differences? What are the challenges in each one of them?
In terms of the industry, or in terms of how it relates to experience management specifically?
In terms of how to relate with customer experience management.
The biggest one is, and we started talking about this, is connecting customer experience work to financial and operational outcomes. Part of it is because things have many causes, and isolating any given cause is actually genuinely very difficult. Part of it is because in the C-suites outside of a few select firms, people always talk about customer experience, but if you go to a firm that has built its reputation on experience, and I've never been to an American Express boardroom, but American Express they know they're an experience company.
Yes.
And they think of themselves as an experience company. And so when they do experience, you can feel it. Sometimes the C-suite, frankly, does not get the use of this team. And frankly, sometimes the team does not do the most amazing job advocating for themselves and their business. So that's one. With that come budgets, with that come resource allocations, so everything that kind of flows from that. AI presents two challenges. One is, on one hand, the possibilities all of a sudden become infinite.
Yes.
And you could do
whatever you want.
Whatever you want. On the other hand, people, especially in financial services, especially in customer-facing interactions, are very cautious about AI because of the regulation. So threading the needle between what you should be doing and what you can be doing in these instances can be challenging. And for us, what we're working on and what we're seeing clients increasingly point to is, hey, we know we can get the analytics, but what we need ultimately are the outcomes. And can you help us get to those outcomes? So getting to the outcome, I think, is an industry-wide challenge. It's a challenge that is emphatically solvable. And it's a challenge that we're working to solve. And it's a challenge that many of our kind of more advanced customers, if you will, are working to solve with us and in their own firms. So those are, recognition, budgeting on one hand, AI in the second bucket, and then actually, hey, we need outcomes, not metrics necessarily. And so how do you do that?
And do you think all these challenges is because of the silos that we mentioned, is because it's not lack of data. Data, we know they are there, right? So what do you think is the main challenge to really bring this perspective and really generate those outcomes and value to the business?
I think it's attention span and resource allocation historically.
Okay.
Companies have not necessarily treated CX teams as a revenue center, for the lack of a better word. They have treated it as a cost center, and sometimes as a research center. And so there, to your point, different silos own different components of what actually comprises an experience, right? You have a digital team, you have a contact center team, you have a product team, but the experience team actually sits across all of those. And working across those organizational silos is very, very hard. But I come back to the ability of AI to supercharge a lot of the analytics, a lot of the insight generation, a lot of the very, very crisp recommendations and workflows, so that it's not going to happen overnight.
Yes.
And it's not going to happen in ChatGPT.
Yes.
It's going to happen in AI that is purpose-built for the context, or at least purpose-trained for the context that we're actually talking about. But increasingly, as we're able to pull in more data sets in a way that is just less costly, right? The insights are going to get better. the workflows are going to get better. People in frontline positions, whether you are building a website and you're an engineer, or you are a doctor or a nurse and you're rounding on a patient, you will begin to see very transparent value in experience, because you will know things that you had not known before, and that will cause you to do things differently and better. And when that happens, we're beginning to see it in a trickle.
Okay.
We're beginning to see it in certain industries more so than others. Like once that aperture opens, I think there's going to be a much wider recognition of the true business value of this whole experience thing.
And do you think that people, I mean, employee, especially the frontline employee, they are more willing to understand more about not only the front line, but also the boardroom? They're willing to understand better what is customer experience, how to bring customer experience into the business. You see a willing to pay more attention to it?
I do, because they're willing. My basic conception of the world is that if people's self-interest aligns with what is happening, they will go and do it.
Yeah.
And once people are beginning to see, once you have a couple of nurses basically say that, hey, this rounding tool helped me do XYZ, or prevented patient incidents. Once frontline workers in a hotel are finding that the alerts that they are receiving are helping them resolve customer issues before the customer calls to complain, and their reviews are better, right? Once those things begin to happen, you don't need to name it necessarily customer experience.
Exactly, yeah.
But they will begin to do this thing where you listen to customers, analyze it, and do things differently actually brings tangible value. People lean in very quickly.
Yeah.
Once you can prove value, and once you can prove value to a specific individual or group of individuals, change can happen very quickly.
They just need to understand that their action can cause more value or less value to the company, right?
Absolutely.
At the end of the day.
In general, when it comes to CX action, so that's one of my big four tenets of CX. The last one is, if there's no action, there's no value.
Yes.
Somebody in the real world should be taking the information that they did not have before and doing something differently because of it. If that is not happening, then nothing is happening.
And that is about innovation, right? I mean, doing the same thing differently. I mean, with different resources, right?
Yes. Yes.
And for me, one extra challenge here is about regulation, because all the markets that you're being through, they're all very regulated. Highly regulated, right? How to deal with it? How to deliver better experience, get all this unstructured data into outcomes with all this regulation?
Carefully and deliberately.
Okay.
It is the short answer. Look, we're now in the world where data is ubiquitous, and making sure that the data is stored correctly, analyzed correctly, according to, depending on the jurisdiction where you're in. So in Europe, you need to be GDPR compliant. In United States, you need to be, if you're in the healthcare space, like HIPAA compliant. We at Qualtrics have worked extremely hard to make sure that our data layer is as protected and as secure. We've received recently, this is going to be only for United States, but just as an example, it's called FedRAMP High, which is a federal government kind of level of certification to work with certain data sets.
Okay.
We've just received what's called an IL4 to work with the Department of War.
It's similar to GDPR or GPD in Brazil.
It's next, like for example, for the defense industry, we need to have additional layers of security to be able to work with the armed forces, for example.
Okay.
So that's one aspect. And then you begin to work with the customer to make sure that they are comfortable, because they will tell you what their regulations are, right? And so between the public certifications and what the customers know they need, we need to be flexible, we need to be deliberate, right? And we frankly need to pick our targets. If oftentimes in the financial services industry, it might be easier to begin working with AI that is pointed at employees as opposed to pointed at the customers. And once you gain trust with AI pointed at the employees and analyzing kind of, employee commentary, employee kind of employee verbatims, and the customer has gotten comfortable with how the data is treated. And by the way, the full data path transparency.
Yes.
So like where it's stored, where it goes, where it's transformed. So all that has to be what it needs to be. And so, but you evolve with your customers. What I saw over the last 2 years is that in the beginning of the AI revolution, people did not really know how to make rules for what we're doing. They were taking frameworks that were designed for credit risk, and they were applying them to AI. Now people are much more knowledgeable and deliberate in what their policies are.
Okay.
And we work very closely with them to make sure that it works in our systems.
Awesome. Dmitry, we're almost getting to an end here. Time just fly by. So for us to close up here, if a financial service executive asks you where to start, what do you tell them?
Look at your business is what I would tell them.
Okay.
Understand what are the burning business problems that you're looking to solve, and begin there. But if I were to abstract for a bank, I would begin with the key experiences: account opening, loan application, right? Making sure that your app is up to speed. For an insurance company, especially, for example, for a car insurance company or home insurance company, begin with claims. That is why you're there. And make sure that that process is amazing. And if you're a wealth manager or a life insurer, I would begin, as we discussed, with the experience of the human in front of the human, with the experience of the advisor or the agent. So those are my very quick recommendations of where to start. But otherwise, like, think about your business and think about what's important.
And think about the moment of truth and focus on that, right?
Exactly.
Awesome. Dmitry, thank you for your time. Thank you for being here with us, and hope you enjoy São Paulo, Brazil. And thank you guys for the audience. Hopefully you enjoy our conversation, and see you guys on our next dialogue. Thank you. Bye-bye.
Bye-bye.